Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi and welcome to The Conscious Day Trader. I am tuning in from Denmark. I wasn't supposed to trade this morning, but it's the day after CPI, and we had some not so much volatility, which means possibly some good opportunity this morning, and I had a perfect setup on the pound dollar trading the London session, and I'm going to show you how I analyzed the chart, how I found my entry, how I executed it and exit a bit prematurely, but we are on holiday and I did do a trade, so I wanted to get out of it. We did some good profits, and I'll show you that right now. We switch on to camera 2 and we're going to go to the Fibers MT5, and you can see we had $537 in pretty much what was 2 hours, which means $492 for the trade. So super successful day. The week is closing in for two grand after the commissions. So super happy with that. And let's go into why I traded what I traded. And we're going to jump straight on to the dollar index. And why would I want to do that? Is because I'm looking, it's something I've been doing on the last 2 trades, and I want to see what the dollar index wants to do in terms of affecting the pound dollar, and if they're both coming together and singing the same story, I want to be, it gives me more confirmation that the pound is going to be doing what I expect it to do. So let's start. Start with the dollar index. We're going to go to the daily as normal. And we're going to set the daily, the previous day high and the previous day low. And we're going to add a replay in just so you can see what I was looking at. This is the previous day, so I connected there the previous day high, previous day low. These red lines I've put in because I thought that the dollar index is going to drop into these key levels, and for 2 reasons. As we can say, we're going in neutral and we're trying to identify the bias of the day. So we're going to do that separately for the dollar, and then we're going to do it for the pair of the pound dollar. So when we start and look at the dollar, we've seen that it's coming down heavily and filled that gap on the daily from that break there. And we did predict that last couple of days, and that was another trade we took. The equilibrium in the middle. If you haven't seen me before, from Ict, you will take the Fibonacci, previous daily high, previous daily low, and plot the 50% value. So if I change that to the Fib retracement. So previous day high, and the 50% is the equilibrium. Anything above this is premium price, anything below is discounting, meaning discounting we're going long. Premium price we want to be shorting. So why did I go long? Someone might ask. What did I see in the dollar index? First of all, we filled this fair value gap and we've been selling since the 6th of January. And we had a sell order here, an order block here with a bit of the order block with the green candle there around the previous daily high. And if you look at that previous daily high, it's exactly, if you drag the Fibonacci level from that to the bottom of that previous day, it's around the 38.2. So we have a previous daily high, a 38.2, and we also have a fair value gap which hasn't been filled on the daily. And you can see that right there, from that wick to that wick there. This is the fair value gap. So the market has one option to come back all the way up. We're at discounted price, which is always good if you want to be going long. So the price would come back up into the previous daily high, into this fair value gap. That's one solution. But before it does that, look how close the price is to the 102.0. And round numbers do have an impact. And next stop 1015 below this low here, which is also filling up these fair value gaps here. And if you can spot it, or where the price is now, we're looking at that fair value there. And if you're wondering how I drew that, is from that wick to that wick there, and that's the fair value gap. So you have multiple things that are coming together to give you an idea of what the dollar is doing. Now, when I was seeing this, and I was actually telling this to the Discord guys, so the squad, that we have a quick meeting in the morning, we're discussing about these areas and what I thought would happen. Obviously, I did think that there was going to be a retracement, and for me to be able to short pound, which I did, I wanted to see a strong dollar. And all these things were showing me that there's going to be a reaction around this area. Fair value gap there. If I was wrong, this is the next level, but I did think that we're going to come back into equilibrium. And this is the 13th, so ignore this green candle, because we only had information from this red candle here. So we saw that we were the previous day close to the 102. I thought it would come down, tap it, and then go all the way up. So let's now we've got that idea of what the dollar is doing, let's go and see what the pound is doing. And we'll do a similar scenario with all the ICT drawings. We start on the daily. What we've seen is this area from weeks ago where we said it's going to come up and take this liquidity, did happen. Where would be the next liquidity to be taken out? 1250, and also this area here. If you look on the daily across, I've put a line here just to show you these two equal highs here to the pip on the 125. So that is an area where above here, and you also have fair value gaps from this move that need to be filled. So potentially area where the pound would want to come up and take liquidity before it continues lower. So why did I go short? The reason I went short was because we had what we discussed with the dollar. So I thought that the dollar is going to be strong, and we did hit areas of fair value gap previously. So this is the daily candle, so that's the previous day on the 12th. We tapped into this buy side liquidity, which is part of the fair value gap here, from that wick down to this wick. This area here didn't have sellers. People who wanted to go short didn't have an opportunity to tap into the market, because we went straight down and we never retraced. So this is the opportunity here, and I did think that before we sell, we would have breaking into these previous daily highs, and that's what I wanted to see. I wanted to see a strong pound coming from the Asian session in the London Open, coming to super premium discount, premium price, and then I would want it to short. Where to? Back to equilibrium, and potentially down to these levels where it's the sell side liquidity, and you can see the sell side liquidity down here below these equal lows if you drop it into a 4 hour. So what's the play? Let's go down to the 15 minutes, and what we'll do is take the replay back to the London Open. And as we said, let's see what happened on the Asian market. The Asian market was continuation from the previous daily high, continuation down, and then it was soon as we were getting close to the London Open, we had a push up, and you can see this by filling up this fair value gap here. All right, so that was a first indication that this would continue on the downside. As we said, we were expecting a dollar to be to be strong, which would help with this move. So let's go down and see what happened. We had London Open. I had my first position in here, a small position. I had to close it for a loss at the end of the day, because we went all the way to the previous daily highs. And as I scaled in and repositioned my positions, you'll see what happened. And we're going to pay clear attention, because this is a perfect example of how to trade the 2022 ICT Mentorship. It doesn't get more clean than this. So if you can't trade this, I would say go back and study him more, because this is a perfect example. We said we wanted a strong pound, so the pound pushed up all the way up to the previous daily high. We broke the previous daily high, and we broke this buy side liquidity. So multiple things to show that this is confirming that potentially the Judas move is going to work out into our favor to short the market. What do you need after that? You need a break of structure. So we go down to the 1 minute and we go up here. We see these equal highs above the daily and we have a break. After the break of structure, what are we looking for? We're looking for the price to come back up and fill the fair value gaps. And as you can see, I've shown you where the fair value gaps is. One here, and this must be from the 5 minute, and one there, and one there, which is on the 1 minute. So what we want to do is build up our positions after this break. Okay, so I had to close one position from the Asian market, which was this short here. I closed it for a little bit of profit so I can reposition my trades up. And when we went on to this area, I was convinced that this is going to be shorting because it's a perfect example of the ICT concept. So what do? You wait for the fair value gap to be touched. That's your first entry. And you can take some partial profits if that's what you're looking for. A beautiful fill into the second one, and is coming played around into our third entry. Now we have 1, 2, 3 entries. This is where my Yanis sort of management of the trade comes in. I always trade 2 positions. What happens is I trade 1 position here, 2 positions here, 3 positions. When the price comes down here, I close this position for tiny profit, like $8 or something, just to pay off the commission. Why? Because I have 2 positions in a better place than this, and I'm short in the market, so I don't want to be exposed. Because if I'm wrong and this goes all the way here, I have to deal with a trade that is 25 pips compared to a trade that is 8 pips. So I would rather have multiple positions up here. So you're constantly managing the trade like that. Then comes back up and off it went. So what did we have here? We have a second break. If you didn't get a fill here, you didn't see this and you missed this move, it did give you another opportunity because it broke below here, break of structure, came and filled this beautifully. And look at this line here. If we grab that line opposite, look at that, perfect fill of that fair value gap, continuation, came back, refilled that position there, break of structure, and I'm sure these positions will be refilled as well. And look at that, if I wasn't on holiday and I trailed my stop, this would have been a huge profit all the way to equilibrium, exactly what we discussed earlier. Didn't even look back. And I think this is close to, what time is it? 12:02. There we go. Perfect. I'm sure it's going to touch equilibrium. New York session. This might be better to do that. It's 2 annoying clips. So look at that. It just went below the equilibrium for the New York session, and that would have been an amazing delivery of, from your first entry all the way down here, you're talking about 100 pips. Now, if that's not a nice strategy, and it's so clean today, that if you don't see this, I would recommend you go back and restudy the area. If you do have questions on this, drop me a comment, because I feel like it's something that everyone can trade, and it's free knowledge. Obviously the management and is something that you have to deal with experience, but make sure that you check him out, because he's got some really cool content. And if you are familiar with the time, price action, fair value gaps, Judas moves, and delivery of price on after potential order blocks, and that could be a nice way to trade if you want so. So if we go back to, I've only got one screen today, so I have to jump back and forth to my for how we're managing this sort of situation in Denmark, which I didn't expect to trade. But if you enjoy this video and you enjoy watching me trade ICT, please like the video and subscribe, because that motivates me more to provide this knowledge. And to be fair, at the moment is trading this for the profits it's given me is probably better focusing on that than making videos. So, but if I see that there is a little community building up, then it might give me a bit more extra motivation to make these and share this knowledge to you guys. And I love the comments, and so keep them coming. So until next time, next week I won't be trading so much because, as I said, I'm on holiday. I will be back in Italy where I normally have the setup and trade on the 20th. But I will keep you posted, and I might be doing some small short videos of what I see in the market next week. I hope you enjoyed it, and catch you next time.
Run it.